budget has been and gone for another year, and while economists and currency and bond and stock markets and voters will all be mulling over what it means for them, the company news flow will keep on coming in the week ahead. Just 3 FTSE 100 firms are scheduled to provide their shareholders with an update in the week ahead, but 2 of them hail from the same sector, which is the Housebuilders, and that's going to be our area of focus this week. In order, we have full year results from Persimmon on Tuesday the 12th of March, full year results from Vistry on the 14th, and a trading update ahead of its April year end from Barclay on Friday the 15th. Although they operate in the same industry, the 3 firms all have quite different business models and also different geographic exposures, as their respective share prices over the past year might suggest. Vistry's up by nearly 40%, Barclay by around a sixth, and Persimmon's advanced by just less than a tenth. Investors have warmed to Vistry's 2 major deals, 2020's purchase of Linden Homes and Galliford Try's partnerships business, and then 2022's swoop for Countryside. And also, they seem to like 2023's strategic shift towards the partnerships model, whereby Vistry reuses land where it can and provides mixed tenure developments for communities while working with housing associations, government bodies and local authorities, among others. Barclay, meanwhile, remains focused on high-end, high-spec developments, as its premium average selling price in excess of £600,000 per dwelling suggests, although the firm is no longer quite so focused on London as in the South East as before. It is now working on projects in the West Midlands, Hampshire, Hertfordshire and Berkshire too. Persimmon, with its more northern roots, has a broader geographic spread and the lowest average selling price of the 3 at around £250,000 per house. Now, Barclay's trading statement will feature less detail than the 2 sets of full-year figures, but analysts and investors will look to the same data sets so they can gauge how the last fiscal year is ending and, more importantly, what the next one may look like. And overall, there's about 6 different sets of figures to look at. The first is the forward sales book, or order backlog, if you like, and how this compares to last year's revenues and analysts' forecasts for the coming year. Vistry's partnerships business gives it the greatest degree of visibility here, for example. The second is any stay on trends in sales per outlet per week or reservations, where reports from other quoted builders suggest there are signs of stabilisation or even very gentle improvement, albeit from very low levels. The third is completions and average selling prices. We've already discussed the latter, and analysts will also compare trends here to any discussion of cost inflation. Brickmakers have started to suggest pricing is coming under pressure, which is a help for builders, but labour costs are likely to still be on the rise. In terms of completions, Persimmon has suggested completions could go as low as 8,000 to 9,000 in the year just ended, compared to 15,000 the year before, while the basis for comparison at Barclay and Vistry are around 4,000 and 10,000 respectively. Fourthly, price times volumes minus cost gives profit, and that's the next benchmark to note. Any guidance for the coming year, as well as the reported number for last year, will be of interest, and do watch out for any further provisions relating to cladding remediation and compensation, which could puncture the stated figures. Persimmon's pre-tax profits expected to have halved in 2023 to £361 million, and analysts' consensus is looking for a small increase and a modest recovery in 2024. Vistry's pre-tax income is expected to rise both years to £386 million and then £406 million, while Barclays boss Rob Perrins has forecast £1.5 billion in total pre-tax income across 2024, 25, 26. Analysts have penciled in £542 million for the year about to end, and a slightly smaller figure for each of the next 2. Fifthly, attention will then switch to the balance sheet. Persimmon and Barclay carry net cash piles. Vistry has a small net debt position, though remember there are seasonal swings in these businesses there. And finally, watch out for any commentary on land buying strategies, as the more optimistic the builders are, the more land they're likely to buy, although slow planning permission remains a key complaint of the industry. After all 3 are then returning some cash to shareholders as well, so if they're not buying land, that's another option. Vistry is running a £55 million share buyback and plans to return £1 billion to investors, or more than a quarter of its market cap, in the next 3 years through dividends and buybacks. Barclay intends to return £283 million a year to its investors via a combination of buybacks and dividends out to September 2025. And after 2022's big dividend cut to 60p a share from 235p, Persimmon is expected to at least hold its ground from here onwards. Finally, watch out for any comments on the Competition and Markets Authority investigation into alleged information sharing, as well as any thoughts on mergers and acquisitions in light of Barratt Development's plan to buy Redrow in an all-stock deal. Hope that you and your families are all keeping well. Thank you for watching, and I look forward to seeing you again next time.